This is the performance summary for week 15 of 2025, which was the week ending on April 11th. Let's begin by inputting the beginning and ending balances. So the beginning balance was on Friday, April 4th. And the ending balance was on April 11th. So this was a pretty good week. I made $998, which is a percentage gain of 3.8%. And let's look at the trades that were done. These were the 5 trades. And we can see here that the fractions are reduced to below 10%. And that's because the strategy detected a bear market condition, obviously. And so it's going to take it's going to take a 50% position when that happens. And a couple of these stocks are reduced to below 10%. And that's because Palantir and Tesla were exceptionally volatile. And so it reduced those two further. And that's part of the new risk management that was implemented in the strategy starting last week. And so let's look at these trades one by one. The first one is Gilead. So it picked up on the dip in the prior weeks, and it bought here on Monday and sold here for a small loss of 1.07%. The next one was Palantir. That one was just a massive trade. It was up 33%. So we picked up on this dip here and rode the uptrend from Monday through Friday. And last week was a pretty volatile week, just like the week before, but this time on the upside. On Wednesday, the NASDAQ was up like 12% in one day after the Trump administration announced a pushback on the tariffs for many of the countries, except for China. Okay, the next one is PM Philip Morris, up 4.5%. So this was the pattern here, where we looked at this sell-off, bought here, and sold here. Next one is T-Mobile, made about 6.5%. Same pattern. Bought this dip and made a profit. And the last one was Tesla. That one was a pretty good one. We made, it was up 12.75%. And same pattern. Buy the dip and sell here. And let's go ahead and input the ending balance into our cumulative tab. And so with last week's gain of $998, the running total P&L since going live last June is now at around $1,200. And let's update this graph. So the new thing that I've added on here is this gray line. So the yellow line is still my actual account balance, the accumulated profit loss on a cumulative basis since going live. So you can see that equity curve, the yellow line. It went up as high as $6,500 or $6,900, and drew down, and it's now at $1,200. Now I added the gray line, and what that is the hypothetical equity curve of version 2 of the strategy. And version 2 is the modification I made to the original strategy. I talk about what those changes are in my last week's performance update, so you can watch that if you want to see that. So yeah, if we had been trading the version 2 algorithm since last June, it would have grown according to this gray line. And you can see that it's definitely less volatile than the original version, and it would have largely avoided the craziness that was there in the past couple of weeks, because it's got some tighter risk management built in. So let's look at the longer term equity curve. Version 2 of the strategy, the one we're trading now going forward, is 19% annualized return, and year to date, of course most of it being hypothetical at this point, year to date it's up 2.7% when the S&P is down 8.2%. And this is how the long-term equity curve looks compared to the S&P 500. So that's the performance review for week 15 of 2025. If you want to learn more about the strategy, please visit my website at returnstream.com. Link is in the box below. Thank you.